Stocks up as the Federal Reserve raises rates again. Welcome to Trading Nation. I'm Brian Sullivan. Mark Tepper with Strategic Wealth Partners. Todd Gordon, tradinganalysis.com. Mark, I can't ascribe the market gains to the Fed because the market has gone up, seems almost every single day this year. But why are higher rates not any kind of a threat, seemingly, to the equity rally?
I think you've got a lot of tailwinds right now. So we're really bullish on the markets given the tax plan, which looks like it's likely going through. But at the same point in time, we're surprised that we haven't seen the relative outperformance of both small cap and industrials versus the S&P 500 this month. In fact, small caps are actually down. We just recently saw an extremely bullish small business optimism index level of 107.5 versus the projection of 104. So that shows that small business owners are really pumped about the economy, and they're expecting much more robust growth in the future than we've seen throughout this recovery so far. So we think there's still a lot of growth ahead for the stock market.
Todd Gordon, do the charts match that sentiment? Is there a, quote, lot of growth ahead?
They do, Brian. And as traders in Trading Nation, we like volatility. But unfortunately, I think more of this slow grind, low volatility trend should continue. If we look at the S&P monthly, just to gauge our context where we are in this trend, if the parallel channels are in fact showing up, you'll see we're right scraping along the middle part of that uptrend. So we actually won't intersect resistance at this rate of ascent until about 3,000 in the S&P. So I like the upside. I'm continuing to be long. If we flip over to what happened with rates, we look at the position of the yield curve at the last two significant market tops, 2000, 2007, Brian, you'll see they're completely different shape. They're much higher relative rates at both the short and the long end, but you get that flat to inverted yield curve where if you fast forward to today, we still have a flattening of the yield curve, but relative to where we are the last 2 years, we're much lower in rates and we're still have a fairly normal shape curve, which points to growth. So we need to see those shorter term rates start to move up. Then we can start talking about a top.
S&P 3000. Now that's a hat. Todd Gordon, thank you. Mark Tepper, thank you both very much. Folks, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.